We are good afternoon and warm welcome to everybody this afternoon, particularly our international attendees, our panelists and expert speakers to the first of our Inside Out webinar series. This is a new initiative of interactive webinars brought to you by Global Business Services, GBS, and its partner, the well-known English language news provider, Vietnam Insider. So particularly in these COVID challenge time, our goal is to bring actionable insights to our network of investors, business owners and expatriates who are considering or already invested in Vietnam. So this is the purpose of our webinars. The agenda for today is quite tight, so and it includes these four terrific panelists that you probably see on the screen. Time permitting, we'll also have question and answers. So please use your Zoom to log any questions that you have, and we'll attempt to get those if we have sufficient time. So just running through the agenda quickly. I'm Ron Wood. I'm the host of today's session, and our first speaker going to talk about conditions in the real economy is Richard Burridge. Our second speaker is Oliver Schwartzhaupt, Chief Risk Officer of Maritime Bank, who's going to talk about credit conditions. And our third speaker, Dimitro Kolechko, is also the Chief Risk Officer of a different bank, a VP Bank, and he will also be discussing some insights about credit conditions and collections. And then finally, our most attractive speaker is Ms. Chan Min Tu, or Kathleen to her friends from outside, and she's a principal lawyer at Vic Law and a partner of GBS. So that's our agenda for today. Let me just remind everybody a little bit about our speakers one by one. And our first speaker, as I mentioned, is Richard Burridge. He's the Managing Director of Simigo, an independent Asian market research and consulting firm. He's a long career, 25 years plus, researching, teaching and testing consumer behaviours, and he's counseled clients on consumer behaviours, responses and bounce back through significant shocks in different Asian markets, including through the Asian financial crisis, SARS, and the GFC and the swine flu, and now COVID. Fantastic. So Richard's the perfect speaker to tell us what's really going on with a focus on Vietnam, and well positioned to teach us about what's behind the figures in these turbulent times. So, so enough from me for now, and as we go into the other things, I'll introduce the other speakers. So thank you, Richard, and good luck. Over to you.
Thanks for having me, Ram. I'm just going to share my screen and get going. So I'm just going to give you all a short introduction to the economy. And I just wanted to start with where we've come from, look where we are, and then sort of sum up with where we're going. So this is what 2019 looked like from a sort of, what is the consumer market and what is the larger, broader economy looking like in Vietnam. So 2019 saw very high growth, 7%. It's been around 7% for the last decade, a GDP per capita of about $3,000 US, and lots of other numbers there that I'm not going to read out in the interest of time. But you can give you a picture of a burgeoning, booming consumer economy and middle class that's growing, very digitally savvy, sort of mid-aged, average age about 33 economy. So an interesting market, which ahead of it, as we went into 2020, had a decade forward view that was extremely positive, and positive because of workforce participation, the number of women working, the digitalization of the economy and consumer savviness. All the metrics from demographic, economic, international trade were really looking phenomenal, and it was really going to be a golden decade going forward. And so, of course, then we have a little accident. And that said, we're privileged to live in a socialist republic where the government is able to move in and control things very well. And that they did. So, you know, the total infections recorded to date are just over 1,000. This is as of yesterday. 92% of them are recovered. Unfortunately, 35 people have passed away, and there's still 52 people being treated. But of course, you know, I'm from England, and this is less than my home country sees on a daily basis. So a phenomenal good job in protecting the economy through very quick action, very quick tracing, and very quick to lock down and close down schools, close borders, and so on. That said, certainly economies are often driven by emotion and uncertainty in consumer confidence. So there was a big impact, obviously, during lockdown, and I'll show you that briefly. And then there was a small, by global comparison, resurgence on my birthday, which is also War on Invalids Day in Vietnam of July 27th in Da Nang. So a lot of people in a recovery just started to travel domestically, and there was a small resurgence. So there was another scare there, uncertainty prevailed, and the economy took a little mini shock at that point. What we saw from coming out of lockdown until end of July was a marathon of recovery. It was a slow build. Each month was getting better upon the last month. And then what we saw in August, post this little issue in Da Nang, was a very sharp trough, but a very sharp, speedy recovery back to where we had been in July, in September. So, you know, we're probably entering a stage where we're going to see more peaks and troughs. But if anything to be learned from the most recent case was the economy didn't slowly build back up to where it was over a period of months. After the last scare in Da Nang at the end of July, 3 weeks later, it was really back at where it had been pre that scare. So it was a very quick, speedy recovery. So the bounce back was really quite phenomenal. So let's just explore a little bit of that. So you can see what happened during lockdown. This is the stock market view, just of course very sentiment driven, but this is the reaction to uncertainty in the markets, the recovery of that stock market, and then you can see at the end of July, in August, again, uncertainty prevailed with that little shock. We can see that in other areas also. This is the Purchasing Managers Index, which Simigo runs here in Vietnam and has done for a very long time. As you can see, briefly, anything above 50 would suggest growth in manufacturing. Manufacturing contributes about 24% of Vietnam's economy. And you can see during lockdown what happened to manufacturing. You can see in August what happened here after that dip in July. And the latest data just out today shows us back in a growth and expansion mode for manufacturing. So new orders and output from production is back on the increase. Unfortunately, labor is one area that is not back on the increase and continues to decline, although it's the softest decline we've seen since COVID-19 struck. And that's a point I want to refer to, because when you look at the jobs that are added to the economy, it's quite interesting to see really what has been the impact on jobs. So in 2019, 450,000, I'm rounding, but 450,000 jobs were added to the economy. In Q1 of 2020, still 300,000 jobs were added. And then in Q2, 2,180,000 jobs were lost. And that's lost jobs. That it hides or masks the fact that a lot of people would have been curtailed their income. The economy is largely driven by small and medium-sized enterprises. So a lot of those businesses would have had their incomes curtailed, and therefore the people running them. But also people in white-collar and blue-collar labor environments would have had corporate reactions which would have reduced their income somewhat temporarily. And there's a picture of some nice rice paddies there, and that's really to demonstrate the sponge that the agricultural economy in Vietnam acts for the total economy. So when a lot of particularly blue-collar labor can't find work, it tends to retreat back to its hometown. There's a lot of migrant labor, and that hometown tends to be rural or small urban areas that can absorb an awful amount of shock, in that people still have a roof over their heads, they still have a family home, typically near farming or fishing. They can still eat, but of course they are grossly underemployed, and therefore the economy loses productivity. but it is a unique position for a lot of Southeast Asian markets where you have a raw economy that can really absorb economic shocks incredibly well, and Vietnam is very fortunate to be one of those. Just demonstrating here over time some key metrics that some of you might be interested in seeing, looking at Q4 of 19 as a point of comparison, Q1, Q2, and Q3. So all the data is up to date for Q3, and then the final column there is just comparing data year-to-date September 19 to year-to-date September 20. And we can see that just running through that in Q2, GDP growth dropped. Didn't go negative, but dropped obviously significantly. In Q4, we were looking at close to 7%. In Q2, we were looking close to 0. Industrial production fell to a negative point. Retail sales fell to a negative point, or its growth, sorry, fell to a negative point. Amazingly, exports have continued pretty well. Imports at less speed, so giving a trade surplus of about 17 million as of year to date. Price consumer index, real inflation remains below 3%, which is great. A little bit of a drop, still staggering amounts of, this is dispersed direct investment as opposed to promised. So still a staggering amount of foreign direct investment coming into the economy. And probably the saddest one there for a lot of homes is the jobs actually subtracted, not added. So if I just look at that from a summarizing the year-to-date performance, then, those are numbers, metrics that most countries, any country would be extraordinarily happy to be looking at relative to the rest of the world. And also, when COVID struck, we produced quite a number of webinars and documents looking at strategies for bounce back and how to manage through the crisis. And back then we were forecasting the same GDP, and that forecast remains true today based on these numbers. In fact, the trajectory that we envisioned for consumer spend and consumer growth, because that's really our focus, has been almost right on track. So, and we've taken into account obviously the falling income and the lost income of those people who've lost their job. And then for those of you that are looking inwardly from overseas into Vietnam, this was a nice piece courtesy of the World Bank in their most latest report on the economic impacts and reactions and forecasts. So this is forecast GDP for different countries in our region. And you can see that Vietnam is topping the table at just under 3%, followed by China around 2%. Myanmar also expecting some growth. They have quite a slightly different budget year, but anyway. And then every other market looking at a contraction. So Vietnam remains, and that probably explains the foreign direct investment levels, remains a very attractive market for inbound investment. And its long-term prospects and its bounce back are really quite phenomenal, and one has to bow down to the government that's led the country through this crisis. I don't know how long I've been speaking to, but I was on a limit. That's really all I wanted to say. And if you have any questions, you can reach me at ask@sinigo.com. If you want the slides, drop me a note. I'll send them to you, no problem. So back over to you, Ron. I'm going to stop sharing now.
Okay, great. Well done, Richard, and thank you. That's, again, very interesting as always. I guess just one question before we move on. What are some of the things that you believe the figures don't surface particularly well? Because, yeah, Vietnam has obviously done well not to be ravaged by the virus, but it also appears that, some sectors, for example, tourism and so forth, seem to be still, in a kind of coma because of the lack of the tourists, and obviously whatever other restrictions because of the travel ban. So, 2% not a bad average in global standards, but what are some of the areas that you think are going to be take a bit longer, perhaps, than others? Yeah,
I mean, first thing I'd say, not a bad average. It's a phenomenal average in the global circumstances, and the fact that exports are maintaining the levels they are, given the international demand, one would have thought would have had a huge impact. So what don't the numbers tell us? The numbers don't tell us the number of the increased interest that particularly manufacturing is getting. partly as a reaction to politics and geopolitics with China, but also, let's be honest, manufacturers are looking for margin, so it's also down to the cost of labor. The other area that it's really hard to get a handle of is the underemployment and the long-term impact of that lack of productivity. The hardest area that has been hit, of course, has been tourism, and Simigo has produced a study on the tourism industry just recently, looking at consumer responses to tourism. It was rebounding from a domestic point of view beautifully until that crisis hit at the end of July. So the tourism industry domestically sort of had a 2-week window from school holidays, which were delayed before that crisis hit, and then cancellations were the norm. And of course, international borders have been closed, and frankly, I hope they stay closed. Easy for me to say, I'm not in the tourism industry, but that sector has been very, very harshly hit, obviously.
And if the I guess the COVID conditions continue into next year, I mean, nobody really knows with what's going on in some of the developed countries, and obviously some of the developing countries like India and Africa and South America are also facing I guess no deceleration in the conditions. Do you think it's really just those sectors that are going to be impacted that are currently really feeling it, or it could?
It's an interesting debate. Some pundits would be suggesting that there's a backlog, and that's why manufacturing in Vietnam, for example, is maintaining quite strong outputs. And is the longer term demand going to drop? In certain elements of manufacturing, so textiles, for example, has probably lost somewhere between 20 and 30% of its orders coming from overseas. So, but at the same time, you can look at some of the manufacturing for electronics, which is growing phenomenally. Admittedly, there's not too much value add beyond assembly here in Vietnam, but it's certainly helping with the employment levels in manufacturing. So honestly, it's an unknown, but just the latest numbers from the Purchasing Managers Index suggest that, again, we've seen a couple of dips between the reopening after lockdown. We've seen a couple of dip months, but again, factories are seeing strong orders coming in at the moment.
Okay,
what's going to happen 6 months from now? I don't know. Sorry.
Wow, somebody got to supply the world with manufactured products, and people still need clothes and shoes. So, so let's hope. Let's hope. Thank you, Richard. Excellent. Well done. Okay, so we're moving on with our agenda, and again, what I want to do also while we go to our next speaker is introduce a poll for our audience. Again, those that are experienced with Zoom webinars know that the poll is basically a multiple choice questionnaire that comes up, and I've just got a very simple one about the audience's debtor experience in Vietnam. Have you got anybody that you're dealing with that owes you money, or that you're worried about owing you money? And again, just to see what's the level of experience of our audience. So I'll launch that during the next speaker. And our second speaker is extremely well qualified, Oliver Schwarzhaupt. I hope I got that right, Oliver. Holds a master degree in economics with majors in finance, capital markets, and econometrics. That's statistics for non-economists. And is the Chief Risk Officer at Maritime Bank based in Hanoi. He has more than 25 years experience in international banking and risk management, and a long track record in implementing best practice risk management and meeting the regulatory requirements of developed and emerging markets, having worked for many European, Middle Eastern and Asian financial institutions. Before Maritime Bank, Oliver was Chief Risk Officer at Khaliji Bank in Qatar, and Chief Risk Officer at Maritime Bank previously as well in an earlier period, and a Deputy Chief Risk Officer come Head of Risk at the Emirates Bank, NBD, in United Arab Emirates, and Commerzbank in Germany, where he headed the rating method system. So that's a bit of an introduction to Oliver, who's going to be focused on the debtor management in COVID conditions, but also talking about the banking aspects to credit management. So thank you for joining, Oliver. I know it's quite a bit of, even it's 10 minutes or 15 minutes, there's quite a lot of preparation involved. So take it away, please. Thank you.
Yeah, thank you very much, Ron, for having me. And it's good that you mentioned that it's the second time that I'm here in Vietnam. The first time I was with MSB between 2010 and 2012. And now I've come back last year, and it's good to be able to support MSB and the banking industry while being here. You mentioned also that I have statistics, I have studied statistics, econometrics. This is true. Therefore, it's also good to see that Richard has published and let us know all the statistics about GDP and etc. And what I wanted to talk about is the what's really happening in the bank, what's really happening in MSB. And the main questions are, how can we, on the one hand, support our customers, but on the other hand, we have to make sure that we are doing this in the best interest of the bank. One big question is, and the answer I think is clear, it's a rhetoric question, does COVID have influence on the credibility of customers? Do we see customers with financial difficulties? And the answer is clearly yes, we do see that. Many customers can see a decrease in their income, and how we are dealing with these customers. What are these customers doing when it comes to collection? And the title is debt management, so I'm talking a little bit about collection. I'm also talking about, let's say, SME or corporate customers. Customers are trying to delay their payments, for example, and when collectors are trying to call them, they're not picking up the calls, for example. So what are we doing as a bank? Of course, we cannot let them not pay, so we have to be flexible in a way. We are not calling only once or twice these customers, we are calling them maybe 3 or 4 times. We will need to know if these customers are willing to pay or are they not willing to pay. So again, if these customers are willing to pay, I think the bank here in Vietnam has the responsibility to support these customers. So we need to come to agreements that maybe the principals are not being paid directly, but we will schedule it, for example, for a couple of months. And Richard has mentioned it, the tourism industry, which has been really suffering. And maybe you guys know some of the 5-star hotels here in Hanoi. They have sent people home, but what they did quite cleverly, they have sent people home, let's say for 4 or 6 months, giving them a minimum salary so they can survive, but also with the option to come back after 6 months. So it would be, in my opinion, not correct to penalize these customers, retail customers who have taken maybe credit card or a home loan, and directly force them into default. We have a responsibility as a bank, and at the end, when we are supporting these customers, we are supporting the economy as well. So what I'm trying to say is that flexibility in our reactions is probably key. This comes to telecalling, this comes to field collection as well. And we have to deal case, I wouldn't say case by case, but because these are clusters of cases. And so we are going ahead with that. On the corporate or SME side, it's the same. We can see that there are difficulties. From a portfolio point of view, for us as a bank, it's not significant. But the central bank has given the opportunity for all the banks to reschedule, to be in touch with the customers and find the best way so they can pay back. This is the reason why we don't see an increase in NPLs. We see an increase in distress customers on both sides, retail and corporates, but we don't see an increase, maybe marginally, in NPL ratios, which is great for us as a bank, which is great for the economy as well. How we are dealing with the bank's own portfolio and how we are dealing with our main shareholders or the, let's say, the board, or how we are doing this. We have established a reporting mechanism, at least on a monthly basis, where we are giving a full overview on these portfolios, industry specific, coming back what Richard said previously. And of course, we are analyzing what could happen in the future. Do we need to adjust our budgets for the bank? Do we need to adjust provision figures for the bank? How we are planning all these things. So we are doing that on a monthly basis and reporting directly to ExCo and also to the board risk committee. What I'm trying to say is that we have to deal with two sides. One is the customer side on the one hand, the other one, of course, with the shareholder side in the bank, which is definitely a big issue during these times. But until now, I think we have managed that quite well. So that's maybe a kind of introduction from my side.
Okay, thank you, Oliver. So is that that's your opening comments? Are you happy to take a question? I've got one question that we can deal with. It's directed to you, actually, about taking action about a customer, a trade customer that hasn't paid for an existing trade receivable. Have you got any? I mean, again, from a banker's point of view, it's generally customer to customer, but we've got one question that you can probably see if you go to the Q&A box, but what is the legal recourse on a customer in a trade if a customer in Vietnam doesn't pay for an existing trade receivable? Any thoughts about it?
We should ask the lawyer about that.
Ask Kathleen, okay. So we might let her do a talking before we get to that one, but we've got, that's definitely one of the questions that's come up. But yeah, one of the comments is, one of the other questions, which is how long can Vietnam keep its borders closed, given, the impact on tourism and FDI, when people can't visit, they can't invest as easily. And that's obviously really important to a developing market like Vietnam. So, so any of our panelists welcome to comment about that particular question. I won't name the questioner, but one of our viewers has asked that question: how long can Vietnam keep its borders shut like this? Because it obviously has more effect on a developing market than even the very wealthy markets that aren't so dependent on FDI. So, any comments about that?
I think it's an easy and difficult question at the same time. Until now, I think the Vietnamese government has very intelligently dealt with the whole situation. And sometimes I'm telling my friends in Germany, I feel more secure here in Hanoi than I would feel, for example, in Berlin or in Frankfurt. So I think we have, since we are now in October and the world is hoping that there will be a vaccine very soon, this will be the main ball game in the entire world. That's the first thing. Second thing is, I think the government has already made some relaxations for experts, diplomats anyway, and for others to come into the country, but still strictly trying to contain the disease. So if we don't have a second or third outbreak, I see that in the next 2 or 3 months we can further relax and bring the economy back. But there are so many buts and so many things we really don't know. So if we have a webinar after 2 or 3 months, we can probably answer this question. And that would be my thoughts.
Okay, thanks, Oliver. Richard or Dimitro or Kathleen, any thoughts about how long Vietnam can keep its restrictions there, you know, given the impact on FDI?
I don't understand the question of impact on FDI. FDI dispersed is down 3% from last year. That's phenomenal. So I get the sentiment if you work in tourism or hospitality, but I think to protect a wider economy, the longer they keep the borders closed, the better. And I don't think FDI is going to be that strongly impacted looking at year-to-date numbers.
Yeah, I think I saw some numbers that showed it's down a bit, but it's still such an important way of balancing the books in Vietnam might be the point of the question.
It's down 3%, Ron. 3.1%. Yeah, it was just in the presentation I gave you. So that's the latest numbers year to date. So I don't know.
Okay.
Yeah.
I think
okay,
you should look. I think we should look also on the industrial land prices, which I think through the 3 to 4 months of lockdown, industrial land prices grew 25 to 30% versus beginning of the year. And I think this is indirect reflection of the FDI expectations. You should also understand with you quite clearly that FDI's decisions are not made spontaneously, like a car purchase or like, I don't know, FMCG purchase. So FDI decisions are being nourished and decided in several years in advance. But if you look at recent approvals, for example, I read that Japanese state approved some package to reduce dependence from Chinese in supply chain financing. And the package is around $800 billion. And Vietnam enjoys 2/3 of this in future inflows. But FDIs, this is not one-off, which will be made extremely fast. So it has more lagged effect. Thank you.
Very good. Well, interesting to hear that there's still those hotspots, but obviously for the, you know, for some of the FDI, it's driven by the SME market. For the big infrastructure investment, that obviously does have that long lead time. But for the typical manufacturer that's migrating some of his capacity or all of his capacity from another Southeast Asian country like Korea or elsewhere, it may actually, the lack of being able to travel and talk to partners or acquire that facility logically slow down a little bit. So 2% sounds like a very good number, but let's move on because we don't want to use up all our time. So we finished the first poll of our audience. 21% have had some experience with debtors in Vietnam. So just 21%, 14% say no, and 64% say not yet, which means it's coming up potentially. You know, so not a yes or a no, but maybe in the future. So, so thanks to Oliver for his thoughts, and we'll move on to our third speaker while we collect a few more questions. Our third speaker is Dimitro Kolechko, who also has a master's degree, but this time in International Business Administration from Kiev National University of Economics. Dimitro has over 20 years of experience in banking with over 14 years in senior management positions in risk management, including Chief Risk Officer at Raiffeisen Bank Ukraine, CRO at Alpha Bank Ukraine, and CRO for, I'll never get this right, Dimitro, Hypo Alpo Adria Bank in Bosnia and Herzegovina, something like that. Okay, but since 2015, he's had the pleasure of being in Vietnam as head of risk management division at Vietnam Prosperity Bank, or commonly known as VP Bank in Vietnam. So again, a lot of a lot of different types of risk in VP Bank because it's in all sorts of markets. So hopefully Dimitro can also give us some insights about his perspective on the current situation with debtors and credit management. Thanks.
Thank you, colleagues. I would like to focus on two major questions. And actually, these two major topics, this is what investors regularly ask me when I have recent meetings. The question number one is about liquidity, second about credit quality. So I would like to stop first on liquidity topics. If you would like to see the development of the interest rate curves, you would see that from January on, and even from December 2019, it was relatively stable. Then there was little peak for 2 or 3 days in April, where overnight rates went up to 3.5%. And then it stabilized, and currently overnight rates, 1 week, 1 month, 3 months, money market rates are on record low in the whole history of banking of Vietnam, reflecting extremely good and sound liquidity situation in the country. Second measure so this is actual, this is the reality. And I think it just confirms to what Oliver and Paul has mentioned before. Very well managed by government, the economy allowed to enjoy quite stable and good liquidity situation. Moreover, despite my previous experience working in distressed markets like Russia, Ukraine, Bosnia and Herzegovina, I worked also in Austria, supervising some countries. During this crisis, Vietnam banks didn't saw outflow of liquidity. In contrary, we saw and enjoyed a big inflow of deposits and CASA, which is reflecting the trust of the population over the banks. And from another perspective, I never saw a country where during crisis, in the peak months of crisis, cost of funds of bank went down by 25 bips. So incredibly good and huge inflow of deposits caused a really good situation in terms of liquidity. Also, I look at another measure, which is called time to wall. And this time to wall measure allows you to see what will happen if credit customers stop repaying loans, let's say 70% of them, and at the same time, depositor withdraw at higher pace during the crisis. And if I look at time to wall and I take it as 0 at December 2019, if January, February, March, April, May, June, July, it continued to grow. So if, for example, my time to wall was 6 weeks at the beginning of the crisis, now currently time to wall is about 2.5 to 3 months. So it's like 12 weeks time to wall, which is extremely good. But it also shows the over liquidity. And the explanation is simple. Banks cut their lending because they don't want to take higher risk during crisis because of uncertainties. At the same time, we enjoy huge inflow of deposits. So you have liability side increasing, asset side not growing as before. So actually what you do, you start cut costing. So its cost of fund went down substantially. Plus, State Bank of Vietnam did a couple of relaxations for state-owned banks. And now currently, this would allow standalone to decrease cost of fund by around 30 bips. So overall, liquidity situation is exceptionally good. And trust of the population into the banks is very substantial. If we go to the second question, which most of investors ask, what about credit side? I think I will just reflect what Paul and Oliver has mentioned, but I would like to focus on two things. First, when we did the analysis of banking sector, it's not homogeneous. So only 3 banks out of 12 showed NPL increase. So exactly as was mentioned by previous speaker, the NPLs not picking up. Actually, we see the downward trend. So it really shows the improvement of the situation. At the same time, Circular 01 of the State Bank allowed to use restructuring for the car clients who are impacted. And then some banks used restructuring, some did not. VP Bank is a big retail bank, so we did online restructuring and mass campaigns to support really impacted customers and the one who needed it. And restructuring portfolios went up and down. Some investors get confused, and I see this quite a lot. They're saying that the numbers of restructuring are quite confusing. Some banks show in big percentage of restructuring, somebody says 0.3%. So how come? So why some banks have such a big portfolio of distressed assets and restructured, somebody has such a small? I think the devil lies in the definition, because some banks define restructuring as any change of contractual terms caused by COVID-19 pandemics, anything, interest rate reduction, deferring of payment, extension of the loan tenor. And other banks use definition, for example, if tenor is not extended, it's not considered as restructured. Also, the current payment are postponed. That's why it doesn't bring homogeneity to the definitions. However, on recent conferences and having CRO Club and exchanging the information, I think it would be fair to say that the level of restructured loans is 10 to 12% in the banking sector, which goes down after the pandemics went back in May and June, July, everything stabilized. I also did some research to see what are the roll forward rates in retail portfolios. So how retail business is impacted and how many customers from being 0 day in delay become 30 days in delay, 60 days in delay, and 90 days in delay. And then we cumulated cumulative roll rates. So how they roll from good customers to, for example, 90 days in delay, 90 plus. And currently what the analysis shows that January it was flat, February it was peaked because of TET holidays. TET is always impacts a lot. Then March it was better than TET, actually minus roll forward rates showing very good performance. Then April and May it peaked up, and June, July, August it came back to the pre-COVID-19 level. And this is not blah, blah, blah macroeconomic research. This is real roll forward rates. If we take relative change, so I can tell you June, July, August, and now September, it is on December and November 2019 levels. So it shows that the portfolio is stabilized. We need to factor in restructuring because they help to keep roll forward rates stable also. But I think it's overall reflects the hit. And even if you take all restructuring portfolio, it's less than 3% of retail books, for example, 2-3%. So it's insignificant versus other countries. So when I talk to investors and they mention Thailand or other countries, the numbers are not even close and uncomparable with Vietnam. So overall, good macroeconomic risk allowed to control the situation and to move all out quite fairly well. And the last measure I would like to stop is real estate prices, because we can say about roll forward rates, NPLs, but real estate, it's indirect reflection of the absorbance and to the shock. So currently real estate sales dropped by 53% versus Q4 last year. And this is, but the prices didn't went down. So where is the devil? So why the price don't drop when the in reality, the number of deals dropped by half? It's caused by three main reasons. Reason number one, it's because developers don't have a pressure to do haircuts now. Because of restructuring and overall favorable conditions in the economy, there is no need for them to accept higher haircuts on their sales, and that's why it becomes quite stable. Second, developers themselves decreased substantially the supply of new apartments, supply of new condominiums. Therefore, the supply went down also by around 40%, which keeps the market in kind of good conditions. And number three, devil is in details. Whatever sales happen now, you should look at terms and conditions of these sales. And I think currently TNCs of new sales are much more favorable versus 1 year ago. So you can hide the discount in T's and C's. For example, you don't need to pay interest for next 1 year, and first down payment can be really small and la la la. So you can have supporting measures that really allow to keep this down. So to wrap up, liquidity is in very good situation. Actually, banking sector is now over liquid. Credit growth is not there because of more cautious approach. And on credit side, we see from one side a rather strong restructuring, from another well-controlled NPLs, and no signs of further deterioration. If I look at macroeconomic research, some of my colleagues forecast potential GDP growth next year up to 8% because of the delayed demand. Because in 2020, many households who wanted to buy apartment or car, they don't go for purchasing now because of the crisis and overall worse anticipation. But as soon as we will have Q1, we will have vaccine, Q2 next year, we will have massive vaccinations around the world. It's expected the GDP will boost tremendously because of this delayed big purchase demand. And this would materialize. Thank you very much.
Okay, thanks, Dimitro. Did you want to share any screens? I just wanted to check.
Actually, I wanted to, but somehow I'm a bit stuck here. So
okay, no problem. And I know Richard has another commitment that he's got to join. So I also want to, again, thank him for joining and give him a chance to say any last comments. But otherwise, thank you very much, Richard.
Thanks for having me, gentlemen and ladies.
Okay. So Dimitro, before we let you off the hook, you know, again, like many countries, Vietnam asked the banks to, you know, be very generous and extend the payment terms, and, you know, not require principal repayments, and you know, so there's a kind of holiday period that's coming to an end by the end of this year for most borrowers, and you know, again, whatever forbearance the banks, I know from my own personal experience as a CEO of one of the companies, the banks were extraordinarily patient because they didn't want to trigger anything. And they also had some direction from the central bank saying, you know, be generous, be unusually generous at this time. But, you know, again, most countries talk about a cliff, a repayment cliff and a fiscal cliff and a few other cliffs if it doesn't, you know, again, if things go back to normal and you have to catch up on all your payments. How's, you know, and also for Oliver, how's your point of view on that cliff that might be coming up, because the banks, you know, basically need to show that the customers are servicing their loans and they're not going from short term to medium term to long term liabilities? Okay,
may I answer to this? First of all, there is no government request from Cliff, directly or indirectly, because we are in Asia, so there can be indirect requests, but it's not there. There is clear requirement to make ease up for certain sectors in terms of interest rate, but not interest rate waiver. There is no requirement to stop or delay any payments for customers. Even when I do restructuring for retail, I can brief you up for 2 minutes. Even through the worst months of the crisis, we designed restructuring in the way that customers are obliged to pay always interest, even through the worst months. And what we did, we just extended for 3 months the payment of principal. But again, interest should be repaid at all time. Second, I didn't do restructuring of retail loans for longer than 3 months, because I worked in countries who did 2-year restructuring, 3-year restructuring, and then half of their portfolio is dead because customer forgets how the bank looks and where is the branch. And later they cannot figure out where even to pay. So in our case, customer needs to pay regularly, but not principal. And in 3 months, he needs to start repaying. And my current statistics show that after first wave, because 3 months passed already, so one restructuring wave is over, and we see results, after first wave of restructuring, 52% of customers become normal. 30% still needs another wave of restructuring, and 15 to 20% flow into NPLs, which we accept as a hit. You know, I think it's very positive in Vietnam that I think CROs and banks, they don't do this buying time concept, where restructuring is just buying time to recognize the losses. So we are not doing this, and the country doesn't allow and supports this, because based on central bank regulation, if you restructure customer and he is delayed for just 1 day, he will be immediately moved to bucket 4, which means 50% provisions. So banks are not interested themselves to do delayed recognition, because they will inherit huge NPLs immediately. So we are doing healthy restructurings. This is it from my side. Oliver? Paul?
Yeah, I couldn't agree more. And I think now we are in October, we need just to be a little bit more patient to bring everything to the new year. And then, as I said before, if the vaccine will be available, then will be TED holidays. And hopefully after TED, the sun is going to shine again. So that would be my thoughts. Dimitro is absolutely correct. With a little bit patience and support for the customers, we are overcoming, and I don't think there will be any question of cliff or not cliff. And maybe one last thought. My previous experience, we always differentiated between rescheduling and restructuring. And we have IFRS 9 on the horizon here in Vietnam. This differentiation will play a big role, whether we are talking about a real credit deterioration or not. So since this is an external shock, I think it's more important to, again, support the customers, support the economy, and then we will bounce back in 2020.
Very good, thank you for the positive comments. Okay, so we might discuss that a little bit more as we go along, because again, nobody really knows how long this will last for, and there are obviously some sectors particularly impacted, and some of them are quite capital intensive. But let's move on, and thank you, Dimitro, for again stimulating discussion around the credit conditions. Our final speaker today is Ms. Chan Min Tu, or Kathleen, who's legal partner at GBS's Ho Chi Minh City office and director of Vic Law Limited as well. And very importantly, she's the only Vietnamese in our discussion today. So her practice is focused on inbound foreign direct investment, corporate law and taxation. Prior to joining her firm, or setting up her firm, Kathleen worked for years with a Korean firm and helped many Korean companies enter the Vietnamese markets in different industries. And at the firm, Kathleen continues to advise foreign investors on establishing and operating businesses in Vietnam. So her focus today is going to tell us a little bit more on the practical matters around handling debtors in Vietnam, and then obviously she'll probably handle a lot of the questions that are going to come about some real cases. So, so over to Kathleen. Thank you very much.
Thank you. Thank you for your introduction. From my side, I will just share some information about debt management. So I will have three content to share with you. The first is the insight for debt management in Vietnam right now in the COVID pandemic. The second is I will share with you some my experience how to handle, how to settle a bad debt situation. And the third is some notes for the lender if you're going to become a person who giving a debt in Vietnam. So the first one for insight, as on previous speakers talk about, this is not an easy situation. Also for the debtor of the bank. But besides the bank debtor, there is also other cases can become a debt. For example, there is a dispute or sales and purchase contract. There's many contracts in the market, And when it's late payment in the contract, it's also become a debt automatically. And the third, in case of the loan, is not from the bank, but it's from company to company or personal in the market. They also can do loan a debt by themselves. And that's one is sometimes it's become a lawsuit if they difficult to pay because of financial difficulty right now. So that is the first. The second, I would like to share with you for how to handle a bad debt in Vietnam. So as you know, basically for the legal process in Vietnam for a lawsuit, Vietnam will have two levels of lawsuit as a court in order to handle a case like that. But before you go to a lawsuit, a case, you will also can go to the mediation center. In Vietnam, we also have a mediation center in the case of dispute, in the case of a particular or individual loan in the market, and also the arbitrator beside the court. So basically, there's many ways to handle the situation of bad debt, especially for the bank. The bank also have a special from the law of Vietnam. If the bad debt have a secured asset with a register, you can go to a shop. We can say a reduced procedure with a very short term to handle the case at the court. So it's not mean that you have to spend a lot of time to handle the lawsuit or the case to get back the debt, but you also can go with a reduced procedure. Basically, the debt in Vietnam need to be registered. That is the highest, how to say, is actually the easiest way to get back the money. In case it's not from the bank, in case the lender is a company or person giving a loan, then you may not know how to do procedure. Then you will face many trouble in case it's difficult to get back, or if it is a case of late payment from a sale contract or for a service contract, then you will need to follow some steps before you go into a lawsuit. For example, you would send in a warning letter, you could negotiate. There's many ways that people is going to do before go to a lawsuit or get it more serious. Because right now, every people understand all the company have an individual have financial difficulty. That's why I go into the third issue. Is a note for lender. First for lender and second for a debtor. The notes for lender, in order to give at the beginning when you want to, because right now also, I'm not talking about the bank, but for the company or individual want to give a loan, then you may need to consider, because right now also many people have financial trouble, they will ask for a loan. But first of all, you need to identify the debtor. The debtor is a company or personal, and company or personal have very different point of view or different situation of legal in the final sentence in the, at the end of the day. For example, for a company, it depends on this is limited company or unlimited company. With limited company, as you know, their responsibility will limit in what their capital. So you will need to check the capital first. For personal, the best way you need to have collateral. Yeah, all people know the collateral is the best way. However, in order to identify or to know many loans, I see that they only try to get the money, and the lender only give money by a paper. They even not have collateral. So that's one you may need to be careful. Yeah. And the second thing you need to also note here is identify collateral. Collateral is not only, if it's a real estate property, then it's quite easy and quite sure. You evaluate the value, and then you check the legal document of that property, then it should be clear. But there are also other kinds of collateral is IP asset, intellectual property. So in this case, I see in the market, some loan agreement, security agreement also be secured by the IP. So how to identify it? You need to check if the IP is registered or not. If it's a copyright, also have procedure and the license for that, or trademark, also have a license. So that all of this we need to show very carefully about the documentary. And one more thing is about the collateral belong to who? It's together with debtor and collateral. In many cases, I see the owner of the collateral, for example, assets of company, IP assets also belong to personal, or even real estate property is belong to personal, belong to the shareholder, but it is used by the company. It's like the company have a right to use it, even have a cooperation contract between company and shareholder to use the asset, but basically the asset still belong to shareholder as the ownership document. So in that case, if you not check carefully, you sign the security agreement with lender, which the debtor is company, then in the future, the debtor is wrong. The asset is not belong to that company or in personal, like that. And the third one you need to note here is the signing contract or procedure. In Vietnam, we have procedure to register the security agreement. If you have collateral, the best way you register it, because when the thing happened at the end of the day, in order to handle the loan, then the court will always priority handle the case with collateral which register first, and then collateral without register, and finally is the loan without any collateral. So basically, the best way is register collateral. Okay, then we go to the final thing I would like to note with you is for the debtor, in order to get a loan, and once you debtor, if a case happen, for example, then right now I understand there's many cases very difficult for the debtor to handle. But in Vietnam, we have mediation center who can negotiate. We can negotiate about the time, about the percentage interest rate, like that. And also, we also can, for the debtor, we also can share, we can ask for the corporation, or we also can have a renter to guarantee the asset. One final thing I would like to share with you is the support from the Court of Vietnam in the case of bad debt handler. For bad debt handler, you know, if it's the bank, it's easy. Or if a company that still have assets or with collateral, it will be easy. But if the case is the debt should come from a dispute, come from a service fee or the payment late, become a debt, then the first thing you will need to do is ask the court for supporting a security measure that is urgently block on the bank account, for example, of the company, or even block asset, or that is to guarantee or to make sure at the end of the lawsuit, you can get back the money and the money is available for you. So that is on the legal basis I would like to share with you. Thank you very much.
Wow, thank you, Kathleen. That's very technical, but I think it's exactly what some people would want to hear is the specifics about the different kind of debt recovery. I mean, one question, you know, one question I had was, what's the value of a debt acknowledgement? You know, so often with the debtor, you know, you ask them to acknowledge the debt. It's there, but you know, often there's a lot of paperwork every month or at certain times where you ask the debtor, please acknowledge that this is the actual amount of the debt. Can you explain what's the benefit of a debt acknowledgement letter?
I'm sorry, I'm not hearing you very well in the end of the sentence. Can you repeat, please?
Yeah. What's the value or the benefit of getting a debt acknowledgement from a debtor?
Actually, to understand the knowledge, the data that is quite important. In Vietnam, we also can have general information from, yeah, that's one you also remind me one thing that I'm missing to talking about is registering and also network information about a debt. So in order to know that debtor have a good reputation, and also in order to know that collaborate use for another debt or not, then we very important to value the debtor as this good reputation or not. And we have network, we have government information to check it. We also have a document of the debtor in the bank or in the government system to evaluate and to value on the debtor like that.
Okay, thank you. Another question. Again, this one for all of our panelists is how long should an investor or a company wait before seeking help about a debtor that won't pay according to the agreed timeline? So by Vietnam standards, you know, again, there's always somebody going to be late, especially in the current situation. But, you know, how long is long enough before you need to go and get a lawyer or somebody else, an agent, to help you solve a problem?
Yeah. Yeah, actually, usually before going into ask for help from lawyer or the court, you also can negotiate. If the debt is come from a loan agreement between two parties, usually we prefer official letter, warning letter between two parties first. And then the lawyer also can send a warning letter, then go to the court. If we go to the court with this is a civil or the trading case, is with fact form 2 to 3 months to handle the case. So basically, it's not a very long time to get back the debt. But after the court, we have to go to enforcement procedure, and it depends on collateral is available and the money available or not. So basically, before go into a debt or a legal lawsuit, it depends on the case. If the case is very obvious, like collateral clear, then negotiation, that is, we work well, mediation center can help. But in case it still have dispute, or it's very hard to find access, or collateral is not there, then you better go strictly and immediately to the court to protect as well.
May I jump in here just to add a couple of things?
Thanks, Dimitra.
First, according to the law in Vietnam, banks cannot do debt settlement. So right. You cannot forgive part of the debt. This is important to know. So what you can do in the worst case, you can do interest and fee waivers, but only in very exceptional cases. In most cases, by law and by definition, you are not allowed to do debt settlement at all. Is first. Second, from January 1st, Parliament made a decision that no outsourced collection will be allowed. So outsourcing agencies need to close and cease their operations from January 1st, 2021. However, we see that all outsourced agencies are now get the license to be legal advisory companies, and they proceed under different umbrella. So they don't change nothing, but they put different umbrella. However, I think the topic of ethical collection is there. And for example, VP Bank has very strong requirement with all outsourced agencies to follow certain ethical collection rules. And in case of violating with very strict penalties. This is currently, always was a very important, but this is one of the very important features that need to be observed. What is really warning is the law that envisages that from October, November, I think from October, customer can inform the bank or any institution that he doesn't want to receive calls, receive SMS, receive advertising. And any violation of this law will be penalized up to $100 million per case. It's around $3,500 per case. So this brings another difficulties in terms of debt collection, but is customer protection, which we need to respect and which we need to accept. Thank you. I just wanted to add a couple points. Thank you.
Thanks, Dimitra. Okay. No, I think there's one that there's a question that's come up that you might be able to help us with. How is the Vietnam banking outlook for funding new FDI manufacturing business during or post-COVID? So one of our attendees has asked, how's the banks looking at funding new FDI manufacturing businesses, at this time or even into the future? Do you see any change in your risk appetite or investability of these FDI manufacturing businesses?
Actually, I see big competition for such customers, especially with clear credit history and good prospects. For sure, during COVID-19 or any crisis, in credit analysis, you factor in how the company will behave during COVID-19. But there are big sustainable companies who still open operational or will bypass the COVID without huge losses, which is inevitable. Crisis will be over, and there is this fake story that in Chinese language, crisis means danger and opportunity, which is not true, but nonetheless, this is a good opportunity as well. So I think there is quite normal and standard appetite for this. Supported by cash flows, it will be very welcome.
Thanks, Dimitro. Oliver, any viewpoint on the FDI kind of borrowing outlook? Still good?
Not particularly.
Okay, very good. Okay, we'll just move. Okay, while we're answering a couple more questions, because I think that's the current kind of catch up that we'll do. I'll launch the final poll because now we've heard all about from our expert speakers all about their point of view. Then the final poll is about how the audience feels, how easy it is for debtor management in Vietnam relative to their home market. So if I can get this thing working, and I'm not quite sure about that, I'll launch the final poll. But whilst I'm doing that, the next question is, what are the, the ways to get debtors to prioritize making payments for one creditor over another? So this is like always a problem when somebody's short of cash. Who are they going to pay? Are they going to pay the bank? Are they going to pay the investor? Are they going to pay their employee? Again, there is a legal rhythm to things, but again, for somebody that is facing some difficulty, either because of COVID or because of business conditions generally, what are the strategies that some of our viewers could employ to get their bill paid first? Okay, can dive in any time. Who'd like to lead that one? Kathleen, perhaps you have some idea on how to get your debt paid first, maybe before the bankers get in there.
Yeah, but how to say, the law also have a provision for that. If it's the company, if the company is a debtor, then for sure you need to pay on the step and the level, the order according to the law. And how is it? If the debt have a collateral, so it's highly priority pay. It use collateral to pay for that debt would have secures collateral first. And then for the company, after that, you will need to pay for the government, financial liability for the government. The third is labor, on the salary. And final is the debt without collateral and can share for all of that. That's about a company. But for individual, it's not like that. But for sure, individual, if have a search for collateral, just have to handle that case first. And the court also will consider collateral first and not collateral. But collateral also secures register or not, and then not register, and finally is the normal launch with on paper only without any collateral. So that is the order.
Yeah, that's the kind of stated order, but any ideas on how to get, let's say you're in the same category as a lot of other creditors, as a bank or as an investor or as a supplier, and you're waiting in the queue with everybody else. So what's the best way to get paid earlier than the others in the same category? Because again, that's, I've been there. it's, you know, some people turn up in your office, that's what they think the right strategy is. But there's obviously different approaches.
Very good question. So why this? The who fastest, who quickest, who will win. So if you want to get it first, you send a warning letter first, you file the assets first, you sell collateral first, or even you send the application to sue first. Then they will handle you because you pressure them. Then they will pay you first. Maybe so, yeah.
Okay, thank you. So the early bird catches the worm, even in Vietnam. Not that there's so many birds, but anyway, how about you, Oliver? You know, you're in the secured category or unsecured. How do you
maybe slightly different, or let's say some nuances differently compared to Kathleen. I think depending on the asset class, when we are talking retail customers, then you have to have a intelligent collection department who are flexibly and working with the customers, as I mentioned in my very early statements. So during COVID, we changed call scripts, for example. Again, are customers willing to pay, or are customers, for example, not willing to pay? Of course, you have to be fast. So a lot of changes on the collection side in the bank to be better than other collection departments of other banks. When we are talking about, let's say, SME corporates, then it will come more to a relationship kind of, I wouldn't say collection, but debt management. So the closer the bank is with the customer, the better to find a solution if both sides are collaborating. And then when we are talking large corporates, etc., then it might be a pure relationship thing. And so Kathleen might be right from a legal perspective, but I'm offering here a more practical perspective because what we have experienced in the last couple of months.
Average recovery will take you, if you go to court and don't have friendly settlement, average recovery for car loan will take you 2.5 to 3 years, and the mortgage will be around 4 to 5 years. So legal is the last resort for sure. So you need to find kind of solution and discussion. And again, it much depends on the customer. So if customer willing to cooperate, willing to provide decent answers, all banks understand that now is crisis and are willing to support that. Nobody will be hunting customers. It makes no sense in good or bad times. So you need to keep constructive relationship. But if not possible, you should also understand that recoveries are moved quite further on. And as Oliver said, that IFRS 9 is on the loop, and NPV formula will kill you simply if you will have the recovery for 5 years. So the best way is to try to seek normal and standard foreclosure.
Okay, there's some wise experience there. Thanks to Mitro and Oliver. I think, yeah, I was involved in the banking side of things with the last credit cycle, and it certainly does take years and years if you're going to go all legal on everything. It's one of those markets where, you know, again, negotiation goes a lot further and a lot faster than the court. That's my experience as well. And again, that's why those NPL portfolios take a long time to clear out if they build up. Okay, one final question, I think, because our audience and our time is nearly up. I'm going to close the final poll. Got a few responses, so just 30 seconds more for anybody that hasn't answered the final poll. But perhaps another one on about okay. Yeah, on the legal side, what's some notes to share with investors about giving or handling a debt case? Because I think you know, again, we've covered a lot of different areas here, and but particularly for the foreign investors, who are a lot of the people on our webinar today, and you know, again, there may be some extra thoughts about how to deal with things as an investor, where it's, you know, there's been some money invested in Vietnam, again, maybe things are taking an unexpected turn one way or the other. And it's a little bit different from secured lending like a bank would typically do, or even an unsecured lending. So any thoughts about that particular question from an investor point of view of handling a debt case? Kathleen, maybe you can lead that one.
From the investor point of view, then, invest in Vietnam, first of all, we basically, from the spirit of law or spirit of the government policy, assets and investment capital from the investor is always be protected and is belong to investor. In case of a loan, if you give in a loan, you are the lender, there's many technical ways to protect your loan. If you follow instruction from the law from the beginning, if you are a debtor, then you also can get the support from the bank as on the speaker share here in that difficult situation. So that's in the point of view on investor. Now I understand this is not a good situation. So all the company understand that, the bank also understand that. So if you have a debt, you are a debtor, then you also can get support, good interest or good support from the bank. Also for another company and individual to give in a loan, they also understand and have a good negotiation at that time, as I see from my experience in the market. And to protect the assets in Vietnam, as I share with you, there's many ways, there are many solutions to get back the debt. Not only go to, yes, legal is the final, the legal action is the final, but for mediation, that is very new. We have a mediation center just the end of last year. It's just opened in Vietnam, International Mediation Center. It means that for negotiation, this is the first solution. So investor when coming to Vietnam, they will be protected by the law of Vietnam for all the capital, for all the asset you buy and stay in Vietnam. That's basically what I want to share here.
Great, thanks Kathleen. Oliver, Dimitro, any final comments along about the investor situation with the debt case? And you can see the results of the poll there, I hope.
I wouldn't like to sound over optimistic. Actually, as Chief Risk Officer, I think myself, Oliver, we are more on the careful and pessimistic side. But so far, Vietnam coped quite good. And I think the results that we see is diligent government efforts combined with overall strategically and timely position of Vietnam as a country. Supported these two factors, they helped to overcome COVID-19 impact. So far, so good. I think that next year we will experience quite strong GDP growth with delayed demand on purchase. More and higher and better even FDI's climate than before that. I think competition around FDIs is rather big, and it will continue to expand even through current situation. And I would expect that interest rate would remain quite low for observable future, because over liquidity in the banking sector doesn't support and not strong credit growth doesn't correlate and doesn't support that rates will go higher. I would also expect higher government spendings beginning of the next year, because this year government approved quite big spending campaign, but the disbursement between approving and disbursement and actually utilization of these government spendings, there is a lagged effect. So we will see it also Q1, Q2 next year. I wouldn't be also very optimistic as people say vaccine will be ready end of this year. I think let's be ready that it will be finalized more or less next summer. So Q2, Q3 next year, because to produce vaccine is one thing and to make massive vaccinations for a couple billion people, it's another thing, which is also kind of logistical and other task. But overall, I think banking sector in Vietnam outperforms the rivals in neighboring countries. And so far so good, and it's rather stable and even showing substantial profits despite the crisis times. Thank you.
Thanks, Dimitro. Oliver, any final thoughts about it? No, you're okay?
No, couldn't agree more what Dimitri said.
Okay, fantastic. Okay, so just to wrap up on the poll results, because we asked the question of the audience, you know, having heard everybody's perspectives, how does it sound like managing debtors in Vietnam compares to their home market experience? 43% said easier, so that's quite good. And 43% said harder or much harder. So it's a kind of, the jury's out. And 14%, the balance of haven't got that experience yet. So they're going to wait and see. So, so thanks to the audience for participating in the poll. I apologise for running two screens at once. But so we've come to the end of our allocated time for the webinar. And I want to thank the esteemed panelists, including Richard, once again for the valuable time today and all the preparations, as well as to you, the attendees, for either staying up late or getting up early, depending on which time zone you're in, and to you know, appreciate all of the efforts involved in pulling together the first of the Inside Out webinars. And we hope to have more of these to come in the next month. We'll have one on the property market in Vietnam, which I think is front and center with a lot of comments today. But you know, also it's not one property market. It's a country with many provinces and different sectors. We heard that the industrial market's still very strong, and commercial, I guess, maybe so. But other sectors feeling a little bit of the cold wind of winter. So we're going to be covering that at our next Inside Out webinar, and we'll be sending around details about that soon. This Zoom webinar has been recorded, and it's also been streamed on Facebook. So again, anybody that registered already can review some of the sections if maybe the discussion was too fast. And we certainly welcome any feedback about today's discussion or follow-up queries. I've seen one or two already that we take a note of, and we'll share those with the panelists. And also we appreciate any suggestions for future Inside Out webinars that's going to help people understand what's going on in Vietnam, particularly during these difficult travelling times. That's our whole objective. So please submit any of your ideas of future topics that may be relevant to a wider audience. So that's it for today. Thanks again to our panelists. Well done. And good evening from Vietnam. Good night.
Thank you, Ran.
Thank you.
Thank you.
Thank you. Bye-bye.
Bye-bye, everybody.